very good morning and a happy Friday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: expected returns on the classic 60-40 portfolio, earnings update, and Euro's surprising resilience. The vaccine-driven rally took another step backward on Thursday, with all major US indexes dropping. The outperformance of value stocks this week, the most in over 20 years by one measure, may not be the beginning of a larger shift. There is an argument to be made historically that value rebounds tend to be short-lived. The Dow Jones was down by about 1.1%, the S&P 500 slipped about 1%, while the Nasdaq was off about 0.7%. Enthusiasm for pandemic-hit companies continued to ebb, with some of the biggest drops in the S&P 500 coming from Carnival, Phillips 66 and SL Green Realty, all down more than 7% on the session. But notably, there was hardly a rush to growth stocks either. The entire FANG group dropped back on the day. The broad move suggests that there may simply have been a wider risk-off trade at play. Seems like the old days, right? When risk is off, equities sell off across the board, and the treasury yields come down, or the treasuries get bid. So accordingly, the 10-year US treasury yields dipped 10 basis points to 0.88. The dollar, on the other hand, rose against the G10 peers, with the Kiwi and Aussie both down almost 0.6%, but the yen strengthened a tad. Asian equity futures are modestly on the red. Pharma company Moderna bucked the broader market's decline and rose about 6.5% after it reported that it has sufficient data from its late-stage trial for analysis of its COVID-19 vaccine. In other markets, Euro Stoxx 600 retreated about 0.9%. Most of the Asian equity benchmarks also retreated modestly yesterday. The Shanghai Composite was down 0.1% and the Hang Seng was down about 0.3%. Apart from the rising cases, what the market also got was another order from Trump prohibiting US companies and Chinese firms determined to be owned or controlled by the country's military, calling them a national security threat. American investment firms and pension funds will be barred from trading shares of over 20 Chinese companies designated earlier this year by the Pentagon as having PLA ties. ADRs of firms including China Mobile and China Telecom fell on the news. The classic 60-40 asset allocation is getting a trim at JP Morgan Asset Management. Such a balanced approach will earn about 4.2%, down from the 5.4% in the coming years, according to the 2.3 trillion fund manager. Strategists at the firm reduced their forecast for global equities by 1.4 percentage point to 5.1 in the next decade, citing elevated valuations for US large caps. They forecast negative inflation-adjusted returns across almost all sovereign bonds over the next 10 to 15 years, with yields remaining low even after rates normalize. In earnings news, Disney reported the magic isn't exactly back, but Disney lost less per share, minus 20 cents versus the expectation of about 73 cents negative, and added more subscribers, 73.7 million versus 65.5 million to its streaming service. Shares gained post-market. Cisco forecast revenue and profit for the current quarter that was better than consensus and beat on both metrics in the prior period. Shares surged in late trading. Tencent's revenue and profit beat. The company said it's coming to grips with China's new antitrust regulations, adding that they don't appear to be targeted at its core games and videos business. Lastly, on the FX front, Euro was one of the only currencies to outperform the US dollar, despite significantly weaker German industrial production and the ongoing virus outbreak, and German Chancellor Merkel warning that restrictions could be extended into December. The single currency has been remarkably resilient. Anti-dollar flows is the only explanation, because the outlook for the Eurozone is grim. On 2nd November, all entertainment facilities, restaurants and bars were ordered to close except for takeaway. Large events were cancelled and work from home advisory was issued. A point to note, in France, hospitalizations are higher than their peak in April, with one person being admitted to the hospital every 30 seconds due to COVID. If this trend doesn't improve, they may have to take further measures, and all of these doesn't add up well for the euro. So something that we have to keep a close watch on. The worst performing currency on Thursday was sterling. This decline is not surprising considering the UK is on lockdown as well. Brexit talks are not going anywhere, and the third quarter UK GDP and industrial production numbers were weaker than expected. We are 1 week into the lockdown, and already the daily new virus cases are at the highest level ever. That's the update. Stay safe and healthy. For those celebrating, wishing a very, very happy Diwali. Spend some wonderful time with family and friends, and wishing you all the good luck and prosperity in the coming year.